There's a truth about trading that almost no one wants to hear. A truth so uncomfortable, so inconvenient, so brutally unflattering that most people dismiss it the moment they feel it grazing the edges of their pride. Most traders lose before they even place a trade. Not because of the markets, not because of volatility, not because of algorithms or liquidity traps or hedge funds or manipulation. They lose because they step into the arena already defeated, internally, psychologically compromised, behaviorally unprepared, emotionally uncalibrated. They lose because the battle they think they're fighting is not the battle that actually exists. Most traders believe the first punch comes from the market. In reality, the first punch comes from within, from the subconscious habits, biases, fears, impulses, and unexamined desires they drag with them into every decision. You aren't losing because you're not smart. You're losing because you haven't understood the enemy. And the enemy is not the chart. It's the mind interpreting the chart. You think you're trading the market, but you're actually trading your own psychology. Every candle is filtered through your biases. Every setup is distorted by your hopes. Every stop loss is tightened by your fears. Every target is expanded by your greed. The chart does not lie, but the mind does constantly. And the paradox is cruel. The more knowledge you acquire, the more dangerous you often become, because knowledge without emotional discipline amplifies compulsive behavior. You think more information will save you, but more information usually just gives your biases more ammunition. You think better analysis will fix your results, but analysis only addresses the part of you that thinks, not the part of you that acts. And you know this. You've felt it. You've known what you should do. You've even written it down. And yet, in the heat of the moment, you did the exact opposite. Why? Because you weren't trading the plan, you were trading the internal chaos beneath it. Before you click buy, there is already a cascade of psychological events unfolding beneath your awareness. Your brain is calculating risk through the lens of loss aversion, a built-in evolutionary bias that makes losses feel twice as painful as gains feel rewarding. Dopamine spikes not at the reward, but at the anticipation of the reward, driving you to overtrade before any rational analysis has completed. Your nervous system, designed for survival in the wild, reacts to red candles the same way it reacts to physical threats. Cortisol release, narrowing of attention, muscle tension, and impulsivity. You're trying to operate in a probabilistic environment with a brain that demands certainty. You're trying to remain objective with a mind wired for emotional storytelling. You're trying to delay gratification inside a system that tempts you with instant feedback. The odds are not just stacked against you externally. They are rigged against you internally. And yet you blame your strategy. You blame the market. You blame timing. You blame volatility. But the real reason you lose is far simpler. You walked into the arena psychologically unprepared. You lost the moment you sat down. The trade was just the symptom. You think you're ready, but readiness is an illusion. Consider Marcus. Marcus wakes up early, reviews his plan, journals, checks pre-market levels, watches scanners, reads motivational quotes. He feels ready, but Marcus isn't ready. He thinks preparation means information. He thinks planning means control. He thinks confidence means clarity. But 10 minutes into the session, the first emotion he feels isn't clarity, it's tension. And tension is the beginning of his downfall. Every trader has two versions: the logical planner and the emotional executor. Marcus's planning self is brilliant. His execution self is fragile. Like a soldier who trains in silence but panics when bullets start flying, Marcus discovers that his preparation meant nothing because he never trained the part of him that actually takes the hit. The psychological part, the one that flinches at losses, chases green candles, hesitates at entries, avoids stop losses, and panics at reversals, is the part actually driving. Marcus believes he is ready. But belief is not behavior. And Marcus, like most traders, loses before the first trade even appears, because his emotional readiness was never addressed. The uncomfortable truth is that you do not need more setups. You do not need more indicators. You do not need more confirmations. You do not need more backtests. If knowledge alone were enough, you'd already be profitable. You know this. Deep down, you feel it, the haunting truth that whispers every time you break a rule. It's not your system, it's you. But saying it's you isn't an insult. It's an invitation to confront the real battle. Because the reason most traders fail is not lack of knowledge. It's lack of emotional integrity. Most traders lie to themselves without realizing it. They pretend they can handle drawdowns. They pretend they are disciplined. They pretend they follow their plan. They pretend they accept risk. They pretend they learn from losses. But the mind is a master illusionist. It convinces you future, you will behave better, even though present, you never does. You assume discipline will appear when needed. But discipline must be trained, not assumed. You assume you'll stick to the stop. But stopping requires emotional resilience, not analytical reasoning. You assume you'll avoid revenge trading. But revenge is not logical. It's biological, a dopamine crash intertwined with frustration loops. The problem is not knowledge. It's behavior. And behavior is sculpted not by strategy, but by psychology. Why do you sabotage yourself? Why do you know exactly what to do yet fail at the moment of execution? Because there are two forces fighting for control inside you: logic and emotion. Logic is cold, rational, analytical. Emotion is primal, reactive, reward-seeking, pain-avoiding. And here is the devastating truth. Emotion always moves first. Logic only rationalizes afterward. This is why you enter early. This is why you hesitate. This is why you exit too soon. This is why you refuse to take losses. This is why you chase. Every behavior that ruins you is emotional, and nearly every justification you give afterward is logical. You think you're making rational decisions. You're not. You're making emotional decisions and using logic to explain them. Your mind is not a commander. It is a storyteller. And the story it tells is always written to protect your ego, not your account. You think you see the market clearly, but you don't. You see it through cognitive filters you didn't choose. Recency bias shaping expectations, confirmation bias seeking validation, optimism bias underestimating risk, loss aversion clinging to losing trades, overconfidence bias inflating position sizes, anchoring bias fixating on arbitrary price levels, outcome bias confusing luck with skill, and gambler's fallacy expecting patterns that don't exist. These biases operate beneath consciousness. You don't choose them, they choose you. They shape your behavior before your analysis even forms. They turn you into a puppet of your biology, your ego, your untrained impulses. And is it any surprise that you lose before you trade? The market hasn't even had a chance to take your money you handed over willingly through predictable psychological mistakes. Let's return to Marcus. One morning, after a string of losses, Marcus promises himself, "I will follow my plan today. No exceptions." He means it. He feels sincere. But sincerity is not strength. Conviction is not discipline. So when the first trade sets up, Marcus feels a twinge of doubt. The candle looks slightly different. Volume is lower. News is coming soon. He hesitates. The trade moves without him. Instantly, his brain fires the signal of loss aversion. He feels he has lost an opportunity. Now he is emotionally destabilized. He jumps into the next trade too early, overcompensating for the missed one. It goes red immediately. His chest tightens. His breathing quickens. His focus narrows. He moves his stop just this once. Then again. Then closes in panic. Then watches it reverse exactly as he originally predicted. Now Marcus spirals into self-hate. Why can't I stick to the plan? What is wrong with me? Why do I do this every time? But he's asking the wrong questions. It's not what is wrong with him. It's why he expected different behavior without changing the psychology that drives it. Marcus didn't lose because of the trade. He lost because he entered the session already compromised. He lost before he started. Just like you often do. Trading is a human problem, a biological problem, an emotional problem. You are trying to perform consistently in an environment where uncertainty is constant, outcomes are random, feedback is immediate, stress is high, temptation is everywhere, and punishment is severe. This environment is the opposite of what humans evolved to handle. You didn't evolve to manage risk, you evolved to avoid it. You didn't evolve to sit still, you evolved to react quickly. You didn't evolve to tolerate uncertainty. You evolved to seek predictability. You didn't evolve to detach from outcomes. You evolved to assign meaning to everything. Trading requires behaviors built on logic, but humans operate primarily on emotion. This is why trading humbles you. This is why trading breaks egos. This is why trading exposes weaknesses within days that life might hide for decades. Trading pits you against the most ancient parts of yourself, the parts built for survival, not for profit. To trade well, you must betray your own biological programming. You must override instinct, override impulse, override fear, override greed. You must transcend your own psychology. So what does it truly mean to be ready? Readiness is not motivation, not confidence, not knowledge, not strategy, not analysis, not indicators. Real readiness is psychological. It means you can see opportunity without chasing it, see risk without fearing it, see losses without personalizing them, see wins without becoming euphoric, act without hesitation, stop without negotiation, and follow a plan without emotional interference. This is not intelligence, not talent, not luck. This is conditioning. The kind athletes train, the kind soldiers train, the kind surgeons train, the kind elite performers in every domain train, the kind almost no trader trains. You lose before you place a trade because you never trained the part of you that places the trade. If I asked you what causes your losses, you might say bad entries, bad timing, bad setups, bad markets. But the truth is deeper. You lose because you can't sit on your hands. You can't wait for confirmation. You can't accept a small loss. You can't follow your own rules. You can't tolerate boredom. You can't control impulse. You can't detach emotionally. You can't remain consistent. These are not analytical failures. These are behavioral failures. And behavioral failures occur before the trade. By the time the chart moves against you, the damage is already done. The trade simply reveals the decision you made earlier, when emotion was in control. Every trade exposes your current level of mastery over yourself. If that mastery is weak, no strategy will save you. If that mastery is strong, almost any strategy will serve you. The chart is neutral. You are not. So here is where mastery truly begins. Mastery is not knowing what to do. Mastery is doing it consistently. And consistency requires identity. Not bursts of discipline. Not temporary willpower. Not occasional focus. But identity. You must become the kind of person who behaves in alignment with your plan, not occasionally. Not when motivated, but as a fundamental expression of who you are. You cannot trade with the psychology you currently have. You must become someone new, someone who respects risk, embraces uncertainty, controls impulses, honors the plan, tolerates discomfort, rejects ego, accepts randomness, seeks consistency, avoids chaos, stays present, and acts without emotional distortion. This is not a checklist, it is a transformation. Most traders never transform. They accumulate knowledge while repeating old behaviors. This is why they lose before placing a trade. They want mastery without metamorphosis, discipline without training, consistency without identity change. But the market does not care what you want. The market cares who you are. And who you are determines everything long before your finger ever hovers over the buy or sell button. Your results are not determined by the strategy you execute, but by the psychology you bring to the moment of execution. You lose before you place a trade because you walk into the arena with the wrong mindset, the wrong habits, the wrong emotional patterns, the wrong expectations. Change those, truly change them, and everything shifts. Not because the market becomes easier, but because you finally stop defeating yourself before the battle even begins.